please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, lots lined up over the next 30 minutes, but let's first start with the day's market action. After a bumper rally yesterday, markets consolidated and traded in a tight range today. So the Nifty traded mostly in the red, spiked in the last hour and closed flat with a positive bias. The Sensex closed with gains of about 30 points. The broader market slightly outperformed today. So look at that, the banks and the mid-caps rallying 0.5%. So for the week, despite a weakish opening in the week, it has been a fairly positive end to the week. But sticking to mutual funds then, inflows into equity funds have seen a sharp fall in the month of March. So from over 16,000 crore rupees in the month of February, March inflows have dropped to just over 66,000 crore. So what could be the reason behind this fall? Let's bring in Prashant Nair, who's done the number crunching, and to bring in exact analysis as to why this has happened. Prashant, we have seen this drop happening over a period of time, but this seems significant. Why this drop in inflows?
Inflows into mutual funds have dropped. Equity schemes have dropped quite a bit in the month of March. March is typically a pretty strong month because people put in money because of tax-related purposes. So this contrast is even starker in the month of March. Take a look at the numbers. The first one is equity, pure equity funds, which is equity plus ELSS. The number has dropped to 6,700 crores from 16,000 crores plus in the month of February. I mean, this is the lowest number in March that we've had, at least for a year. I guess a lot more than a year. You can go back and check the history, but this is a pretty low number. Look at the balanced fund number. Many include this with the equity scheme because, 50-60% is in equity, in balanced funds as well. But to put it separately, balanced funds are doing a lot better, 6,700 crores plus compared to 5,000 crores that we saw in the month of Feb. So what really happened in the equity category? That's the biggest equity, the pure equity category. And for that, you'll have to look at the granular data. Take a look at pure equity, ELSS equity and balanced funds separately. In all three, what we've seen is that gross inflows continue to be pretty strong. Gross inflows essentially includes, you taking money out of fixed deposits or other asset classes and putting into equity. It also includes, switching from one scheme or another fund house. It shows that number as well. So what that number shows is, in all three categories, there is an increase. So in pure equity, it's up 21%. ELSS equity, it's up 94%. In balanced funds, it's up 51%. But what has happened is that redemptions in all three schemes have gone up a lot more. At least in two of the three schemes, redemptions are higher than the gross inflows, and that's really the problem. I spoke to mutual fund industry experts, and they believe this is essentially a result of tax-related selling. The LTCG tax, the 10% tax which was imposed, that resulted in this particular redemption number that we saw, and they're hopeful that gross inflows remain strong, and that trend will continue, and net inflows will again look healthy starting the month of April and FY19. Back to you.
Okay, FY18, for a fact, Prashant, hasn't been very strong for mutual fund inflows, so perhaps FY19 will be. But let's move on to an important update catering to the salaried class. The Income Tax Department has notified single-page return filing form for assessment year 2018-19. It is not as simple as it was being expected, as the amended forms are seeking more information now from taxpayers. Timsy Jaipuria is here to put this into perspective. Timsy, what does the new ITR seek from assessees now? And essentially, this is going to be a more tedious task for you and me now.
Yes, as you rightly mentioned, it is going to be a little more tedious for you and me, as taxpayers will have to disclose salary breakup, giving details about allowances that are not exempt from. Also, taxpayers will have to disclose prerequisite value and profit for salary and deductions under Section 16. Not just this, while ITR-1 can be filed by salaried taxpayers with income up to 50 lakhs and one house property and the interest thereof, the taxman has given a breather also. This time, the taxman has done away with the column to disclose cash deposits made immediately after demonetization. Also a benefit for senior citizens, as 80-year-plus taxpayers earning up to 5 lakhs can fill ITR 1 and 4 in paper forms. However, for all the other taxpayers, the normal procedure continues of e-filing. Now for NRIs, a separate form has been notified for NRIs. They will not have to file returns through ITR 1. They will have to file ITR 2. NRIs can also provide details of foreign bank accounts to claim credit or refunds. However, NRIs now do not need to mention each and every account that they hold abroad. Apart from that, for businesses, it's mandatory to disclose income from property. Small businesses will have to report their GST identification number and turnover reported under the GST returns. Not just this, businesses with less than 2 crore turnover do not have to maintain books of accounts. Businesses with less than 2 crore turnover can also now submit their tax based on a certain percentage of turnover of the business. Taxpayers will have to mention their GST identification number and put it in ITR 4, claiming presumptive tax. So very clearly, it is a huge lot of a success when it comes to tax evasion, as the income tax department and the indirect tax department now would tally your ITR 4 and ITR and the returns filed under GST. So
okay,
all in, the entire process for you and me is cumbersome.
Oh, absolutely, Timsy. I'm dreading filing my returns right now. But yes, what has to be done has to be done. Thanks, Timsy, for joining in with that. We have been speaking to tax experts to understand how these new forms will impact the taxpayers. Here's a view from KPMG's Parizad Sirwala. Take a look.
There are basically the additional disclosures, even in the ITR 1, relates to your income from salaries and your income from house property. Till last year, it was a very simple disclosure, basically a one-line item, because anyways, your details of salary is, as an example, backed up by your Form 16, which is issued by your employer. What they've done is on the face of the form now, which is the ITR 1 itself, there are detailed scheduled disclosures for salary, income and house property. So in your return itself, despite having your Form 16, which is actually not filed with your return form, you have to disclose everything in the face of your return, whether all your allowances, perquisites, benefits and the likes.
Okay, so that's an important clarification to help us understand what the new ITR forms essentially are talking about. But let's talk about the other big global story that we've been tracking all week on CNBC TV18. The war of tariffs between the United States and China continues. Following the latest round of retaliation by China, Donald Trump has now instructed the U.S. Trade Representative to consider a further $100 billion of tariff against China. Now, these are in addition to the $50 billion in tariffs already announced on a list of Chinese imports. Despite the latest threat, a White House official has told CNBC that the U.S. is still open to negotiation concerning China's trade practices. Well, on that note, we will have to slip into a very, very short break, but news and updates will continue on the other side, including exclusive stories. Stay tuned. Welcome back. You're still watching After the Bell on CNBC TV18. Now it's day 2 of questioning for Rajiv Kochar by the Central Bureau of Investigation in the ICICI Bank Videocon case. Now, CPI's investigation basically showed that ICICI Bank had mandated Avista Group to restructure deals worth over $1.5 billion for 7 companies over 6 years. Utkarsha Trivedi was the one who first broke that story yesterday, and he's joining in with the details. Utkarsha, put this into perspective. This is day 2 now. We don't know where the investigation is headed, but take us through what they have found, and essentially, do we have a sense of what is being investigated and what Rajiv Kochar has communicated so far?
So, Kritika, as you said, that CBI believes that the deals of somewhere around $1.5 billion which were restructured by Avista Group was mandated by ICICI Bank to all these companies to go ahead and get this restructured by Avista Group is the point which CBI is probing at this point of time. It was yesterday around 4 o'clock while Rajiv Kochar was on his way to Singapore. He had reached the immigration of the international airport, and there is when the immigration officers really stopped him and handed him over to the CBI officials. From then 4 o'clock to 10 o'clock in the night, and today also he reached early morning to the CBI office in Bandra Kurla complex at 10 o'clock. He's being questioned from the last 6 hours. So almost 12 hours have gone by for questioning when it comes to Rajiv Kochar's case. Now what is important here is that no FIR till this point of time has been done. It's only the PE on the basis of what CBI is investigating, and even in that as well, Rajiv Kochar was not named. Who was named was Deepak Kochar and Venugopal Dhoot. Even Chanda Kochar is not a part of the PE. So we'll have to really wait and watch of what are the what are the evidences which really CBI has gotten, and they're going ahead with the investigation. But as I said, what they're trying to find out is that is there a correlation between Avista Group really restructuring deals for the companies which are clients for ICICI Bank?
Okay, though, those questions are pertinent, but we don't know where it has reached in terms of investigation. Thanks, Utkarsh, for joining in with that. So that's day 2. The investigation is continuing, and of course, Utkarsh will update as and when there is some clarity on what transpires of that. But moving on, the shares of Reliance Communications surged in trade today. This after the Company Law Appellate Tribunal allowed the telecom firm to sell its tower assets with writers. This follows yesterday's Supreme Court order, which allowed Reliance Communications to sell most of its assets to Reliance Jio. Ashwin Kumar, who broke that story, is here with more on this. Ashwin, take us through the exact details of today's NCLT order. Is there some merit in RCOM actually moving court for a stay over here?
Well, as of right now, big relief coming in firstly for RCOM. This was the only stumbling block remaining as far as the RCOM RGO deal was concerned. As you mentioned correctly, the Supreme Court yesterday had cleared decks for sale of non-TAR assets, that's spectrum, fiber, etc. Today, the subject matter of discussion was the TAR assets for Reliance Infratel. The NCLT, what it has done is that it has provided a green signal to the bankers to go ahead to proceed with the sale deed. The only caveat there being that the sale proceeds, whatever is realized, will have to be submitted in an escrow account. That's the only caveat here. Having said that, the question that you're raising here is with respect to a possible challenge. Yes, indeed, as of this hearing, HSBC Daisy, who was a petitioner before the NCLT in the first place, is likely to exercise some caution, is likely to exercise its recourse to legal remedies. But that is something we'll have to see on Monday. As of right now, big relief coming in. Yesterday, Supreme Court cleared decks for non-TAR assets. Today, NCLT clears decks as far as TAR assets are also concerned. Back to you.
Thanks for joining in with that. Let's get to a CNBC TV18 exclusive. We learned from sources that financial services firm Central Capital is looking to enter insurance space. Remember, the company recently sold its forex business to IBIX and raised 1,200 crore rupees. And take a look at how that stock reacted as soon as we broke that story. Instant surge over there, tempered down a bit towards midday, and then again saw an uptick. Now, what we understand from the sources is that the company is in early talks with Aspire Health for its insurance foray. Yashen, who broke that story, is here with the details. Yasha, tell us more about Centrum's plan to enter the space. This is still preliminary talks and initial stages, but what can we expect going forward? Is it just going to be the acquisition route?
Well, Kritika, as you rightly pointed out, Centrum Capital very recently hived off its forex business for an amount of about 1,200 crore. And very interestingly, the management was on CNBC TV18 and they said that the company wants to enter the insurance space. Here, what I'm given to understand is that Centrum Capital has initiated preliminary talks with this company called Aspire Health Insurance to have a brownfield entry in the standalone health insurance space. If you talk about this company, Aspire Health Insurance, it's essentially a three-way joint venture between private individual Rajesh Relan, who's the former MD of PNB MetLife, a Hong Kong-based firm, Macquarie investment firm, as well as domestic private equity player Earth Capital. And this company, which is Aspire Health Insurance, does not have any of the three approvals required from IRDA to start the business operations. But what we are given to understand here is that the company will start initiating the process of acquiring these approvals from IRDA to start its business operations. How will this transaction work? As I said, it's a very preliminary discussion which is happening between Centrum Capital and Aspire Health Insurance. But Aspire Health Insurance, if this conversation materializes, would look to issue fresh equity to make Central Capital the fourth partner in this already existent three-way joint venture, which is Aspire Health Insurance.
Okay, Yash, thanks for breaking that story for us. Of course, that's a stock to watch out for. And if they do go ahead with the insurance plan, it would be interesting to see how exactly that pans out. We will take a very short break, but let's give you some good news. Your wait is now over. The market leader in business news is now available at your fingertips through CNBCTV18.com. Always stay connected with CNBC TV18. Stay up to date with the latest market and financial news with CNBCTV18.com. Available from today on your iOS and Android devices. All the important news, videos, data and analysis at the touch of a button. Welcome back. Let's get to the big national story from the for the day, and this is from the legislative space. The second leg of the budget session of the Parliament has ended without any business being transacted. So the session has been washed out thanks to repeated adjournments due to protests in both the Lok Sabha and the Rajya Sabha. Now, according to legislative research firm PRS, the session is the least productive budget session Parliament has seen in the past 18 years or since 2000. Also, it has ended with resignations from Lok Sabha MPs of YSR Congress. So that is, of course, something that has been a big concern in the last 1 week. But with that, it's a wrap on this edition of After the Bell. Thank you so much for watching. Stay tuned to CNBC TV18. Taking Stock is up next, where you will get a wrap of all the market action of the week and of the day. Stay tuned.